Nvidia is trading far above its intrinsic value of $257.35. There's no buy signal according to value investing, but if you trade stocks according to growth investing, then you may consider buy it. Nvidia Corporation, which invented the graphics processing unit (GPU) in 1999, makes products for visual computing, high-performance computing and mobile computing markets. The company has two major reporting segments, graphics and computer networking. Despite COVID-19 uncertainty, Nvidia's data center business may be more resilient than most markets, reflecting a resurgence of orders from cloud customers and momentum for Nvidia's inferencing capabilities. Data center fundamentals may continue to improve, driven by expanding AI workloads from enterprise customers, while Nvidia's automotive business will likely see growth propelled by opportunities in AI cockpit solutions. The revenue growth came in higher than the subsector average of 12.5% since the same quarter 1 year prior. Revenues rose by 38.7%. Growth in the company's revenues appears to have helped boost the earnings per share. The current debt-to-equity ratio, 0.58, is low and is below the subsector average, implying that there has been successful management of debt levels. Along with this, the company maintains a quick ratio of 9.60, which clearly demonstrates the ability to cover short-term cash needs. The gross profit margin for Nvidia Corp is rather high, currently is at 68.57%. It has increased from the same quarter the previous year. Along with this, the net profit margin of 29.77% is above that of the subsector average.